Good afternoon, traders and investors. Will back here with another one, coming to you with a Tuesday market recap. Hopefully all of you are doing well, and Happy New Year's to each and every one of you out there. Now, of course, we're filming this video on a Wednesday afternoon because, such as many of you out there, I was busy with friends and family yesterday for New Year's Eve, so thank you very much for your patience and understanding. Now, in Tuesday's price action, guys, well, of course, we got the yearly and monthly closes in order, and the month of December wrapped up on a fairly sour note. The SPY coming down for now the third straight trading day in a row, and the QQQ as well, the third straight trading day in a row to the downside. However, let's not get it twisted, guys. It was a very good year for the markets. Even though the month of December was net down for the SPY, down almost 3%, the year-to-date performance was very good at about 24% for the SPY. The QQQ ended the month on a positive note, barely, but still was positive. End of year, 26% to the upside. One of the sectors that was kind of lagging behind and a lot of damage that was done in December was, of course, the Dow Jones and the value trades as a whole. That was down on a one-month relative, 5% to the downside, and on a year-to-date performance, only 13%, so severely trailing behind the S&P. So with these end-of-month and end-of-year declines, guys, are we possibly entering the territory for some decent buy opportunities? That is going to be the question of today's video. So number one, what we're going to be covering in today's video is we're going to be doing a recap of what exactly happened on the Tuesday session and why I do believe that across many different criteria, the market is looking very ripe for some buying opportunities. Not saying to go all in, but it is possibly the start of a buy the dip opportunity in which we can slowly dollar cost average into our favorite stocks out there. Number two, we're going to be going over some major technical analysis across the board here on our major market indexes and into our big tech names as well. And since we do have the monthly candle closes, I'll be doing the monthly candle recaps as well and see how we might be shaping up for the month of January. That is pretty much where the video is going to end. No portfolio recap for today because I didn't really change anything on Tuesday's trading session. So the positions remain exactly the same as they were on Monday. So if you want to see the trades and positions that I have, just go back to the end of Monday's video where I do the portfolio recap. So a lot to cover in today's video, guys. Let's jump into it. Should be quickly or shorter than usual because we are now embarking on the shorter video format, roughly between 30 to 40 minutes, with the longer videos, of course, always on the Friday session. So still a lot to cover today, guys. Let's jump right into the action, shall we? So the SPY ending down 0.36% on the Tuesday session, the QQQ down about 0.85, but we did have some slight rotation into financials and XLV. Was not enough, guys. The month of December was bright red for a lot of the market. On the Tuesday session, you can see it was a case of big tech coming down. That's okay. When we look at the one month relative performance, big tech was your largest winners. And I was saying, if the market chooses to roll over out of big tech, you need the rest of the market to come in and kind of act as a buffer or act as a kind of, brakes for the market, right? We need to see some rotation into the rest of the market. And that's kind of what we got on the Tuesday session. That being said, the market wasn't looking too good on the one-day relative, but on the 1 week relative, you'll see as well, big tech lost leaders on the week there. After putting in a very nice early December, they are now pulling back, but across the board, we're starting to see some rotation coming into the market. On the 1 month relative, however, guys, look at this close. It was all big tech and the rest of the market, especially value, pretty much getting crushed. But this is where I'm going to bring in some of the sector analysis and why it's so important sometimes to get a sense of where we currently stand in terms of the advancing stocks and the declining stocks in the market and why this may represent a decent buying opportunity. You can see that on the 1 day, well, we did have a very mixed market with technology leading to the downside. The 1 week performance, only energy was a bright spot. Everything else was down, no Santa Claus rally in sight. And on the 1 month, as you can see, mainly only tech names were green with everything else in the red. However, I do believe, guys, that it is coming into buy the dip territory. Why? Well, because we have a lot of factors here that are offering some confluence. Number one has to be the fear and greed index. We are now fearful across the market, a stark contrast from when we started the month early on in December when we were in the greed territory. So you always want to be starting to nibble on your favorite stocks when the market is depicting some concepts of fear right now. You can see market momentum, extreme fear, stock price strength in terms of the percentage of net new highs versus net new lows. This is one of the lowest reads that we've had all of 2024. Even though the SPY is relatively close to the all-time highs, it definitely doesn't feel that way. And when I see so many indicators here, especially in terms of stock price strength and stock price breadth, right, such at low reads, it is usually a decent time to go shopping in the markets right now. We can couple that with a few other indicators that I like to look at quite often. This is the percentage of stocks above their 20-day moving average. You can see it's only down at about 23%. 20%. Historically, has this been a good area to buy the dip? Absolutely, guys. Going back roughly 3 years of time, we can go back a lot more, and you'll see when we come down into the low 20s to teens, usually a very decent opportunity to be buying the market. This means that there is only 23% of stocks above their 20-day moving average. So a lot more stocks are crushed than not, and usually when this is the case, institutions do start buying the dip, and we do start to have some rotation across all of the sectors that have been left behind over the course of the month of December. Percentage of stocks above their 50-day moving average shows the same picture at a very low 32% read. Now, it can go lower, guys, but usually when you come in the confines of this lower support range down here, it can represent a very decent opportunity to pick up some of those stocks and wait for that market rotation. And lastly, we have the percentage of stocks above their 200-day moving average. As you can see, we're currently at 52%, which is a lowish read for the year, but not as low as it was last October in 2023 when we had true fear in the markets. So can the markets head a little bit lower? Yes, but is it a good opportunity to start to buy the dip? Absolutely, in my humble opinion, but we want to stay with very high quality stocks, high conviction stocks, of course, because as I said, they can keep dipping. So at least if you buy something that continues to dip, you want to be holding a very high quality company with expanding revenue, expanding EPS, and expanding free cash flows into 2025 when we have a higher for longer rate environment and possible, lingering fears of a second wave of inflation. You want to really be going with those companies that have a lot of pricing power and a lot of free cash flow in the mix. So because of all those factors, guys, I do believe it's a decent opportunity to start nibbling on in the market. A lot of stocks have been crushed. The market breadth has been a problem, but we are bottoming out on a lot of those readings for that market breadth, and it's not going to last forever. There will be some more broad market moves, some broad market dip buying by institutions into the new year. Of that, I am pretty confident. So now let's move into the technical analysis portion of the video, shall we? So moving into the SPY, we will notice one clear thing. We have a massive head and shoulders pattern here on the S&P. So even though I just showed you a bunch of breadth indicators that showed that the market was weak, it can get a little bit weaker, and definitely this head and shoulders pattern does show that we can drop a little bit more. That being said, we are into support right now, 585 down to 576. If we drop a level, guys, and go for the election gap fill down here at 576, it could get a little bit bumpy. Your head and shoulders pattern would get the follow through, and then we will come into our very large support on the weekly time frames. This down here, 567, is your weekly higher low. So even though we are approaching the context of continuation of the daily downtrend, and that may be possible to see some early month volatility in the month of January, well, we do have some very nice weekly support down here, 569 down to about 560. In my opinion, that will probably be max pain for the markets in the current landscape, 6.7 down to about 8%. Usually it's been a great dip buying opportunity all year when you can find the markets, especially on the S&P, down 6-7% at a midpoint between the 12 and 26 EMAs. You can see the bulls usually play some very solid defense down there. So this, if we get down here, guys, it's going to be a heck of a buying opportunity in my humble opinion. It already is, but we know that we can possibly have some further downside, and that will most likely coincide with maximum pain, possibly even coming into daily oversold conditions on the SPY. So I'm patiently waiting to go shopping for my favorite companies. All in all, the markets are reacting from support, but we know we have the head and shoulders pattern here, which could get some follow through. We have a gap fill area, which could be filled indeed. The bulls have the bears have all the momentum right now on the short-term time frames. Would not be surprised if we consolidate a little bit more on the weekly time frames. On the monthly, you can see the December monthly candle close and the monthly overbought conditions, which is why it would not be surprising to get a little bit of monthly pullback follow through into the 12. We're not probably going to get to the 12, but can we come down here, as I was saying, into this lower weekly support level, mid 560s? Absolutely, guys. That would give us a wick down on the January candle, and then we might get a bullish February and March. The seasonality would support that. You can see January is usually a very bumpy month before we get a nice bump into February. Can slightly erode here in the early month of March. We'll see how it goes. But April, May, June is really where it's at. So if we do get some bumpy months here, January and February, with some declines, I think that's going to correspond to a gorgeous buying opportunity leading into the months of late February, March, May, and April, and and even May. So the moral of the story is I will be looking to buy any early year weakness and riding it into the midpoint of the year. I think it's going to present some very juicy buying opportunities on a lot of our favorite companies, and we could make a lot of money in the next 2, 3, 4 months of the new year. That being said, let's take a look at the QQQs. QQQs, same concept, right? Daily downtrend is possibly underway, coming very close to our lows, tagging the 50 EMA as well, but the markets we know have been fairly weak. If the bears do get the downside follow through, well, that'll be daily downtrend continuation, and we will just be looking to slide a little bit more into weekly consolidation. Good thing for us, the bulls have a lot of space here. 484 is your weekly higher lows, looking for a weekly higher low for further trend continuation. The bigger area of support is down here, 500 down to about 495, confluence with the 26 EMA, and you can see that usually in the context of this bull market, except for that Japanese carry trade unwinding Black Monday session, it's usually been a very decent buying area for some opportunities, tagging this at the 26 EMA on the Qs all the way since that October of 2023 flush. So not looking too bad. I am saying that we can see a little bit more downside, but if we do, this would probably be the juiciest buying opportunity that we've seen in a couple months at least. That being said, take a look at the monthly, guys. Monthly, hammer candle, doji candle, whatever you want to call it, this is not a very good candle close for the Qs. It leads us to believe that January could be volatile and could see a little bit more slide in the markets. And if we do come down, well, it would not look so awkward, right? The markets always can set up some monthly higher lows. We've done it many, many times over the course of the last 2 years, and January could provide all the catalysts in the world that the market needs to have those pullbacks. I'll remind you, we have CPI, we have Jerome Powell at the end of the month, we have the start to earnings, and we also have Trump coming into office towards the end of the month. All volatility catalysts that can affect this market. So could we see some monthly pullbacks in the month of January and early February, such as depicted by this seasonality right here? Absolutely, but in my humble opinion, those would be buying opportunities, so I am saving my buying power. I won't be deploying it extremely fast, but if we move lower and lower into weekly downtrends, into monthly consolidation, I will definitely be ready on not only some of the value names, but a lot of the big tech names that will be affected by this QQQ decline as well. Moving into financials right now. So the context of financials has always been a daily downtrend. Lower high is set. They're trying to go for the higher low, but the bulls are not looking the strongest. We really need to see them come alive and set the new daily uptrend. If they're unable to do that, we are just revisiting these lows down here, 47.76 down to about 47.20. In the event we breach this area, as could be the case through the month of January, guys, I'll always remind you the weekly higher lows are here, 46.15, looking for the higher lows. A little bit more would not be too bad. You can see the 26 EMA has acted as beautiful support for the markets all throughout this rally since the late stages of 2023. So I do believe that this combination, the weekly higher lows and the 26 EMA, could provide the last backstop for the markets, all things considered. But as of now, we have not lost any major levels. Still in a weekly uptrend. We will see if the bulls can get a bounce from here. In terms of the monthly, look at this monthly candle as well, guys. Can we possibly get more follow through for a new monthly higher low being set in the month of January and pull back to that area that I've been talking about down here with the 26 EMA, 46.45? Absolutely, guys. That should not be surprising to anybody. The bulls have tons of space, though, however. Anything above 40 on the monthly, looking for a monthly higher low for further trend continuation. So essentially what I'm saying is all across the board, we have the catalysts, we have the news catalysts and the macro catalysts to come down over the month of January. That being said, we have another number of confluence factors, such as the market breadth being very weak, us being in a fearful environment right now. I do believe that the month of January, if it is volatile, it will be the last shakeout event and possibly the last of the beautiful dip buying opportunities for the early first half of 2025. Moving into XLV right now. So XLV healthcare still looking very weak, right? The context has always been this massive daily downtrend, and that simply continues right now. Fairly weak bounce. We will see if the bulls have it in them to reset the daily uptrend, which would be a break of 139.60. If they do not, with such a weak bounce, I would definitely not be surprised if we do get the rollover. Many catalysts lie in the face of healthcare, especially in January with the inauguration. We're going to get Trump's formal policies on what he plans to do with the healthcare insurance plans, Medicare and Medicaid, and we will finally get to see what RFK Jr. plans to do with transparency for pharmaceutical companies. So the sector may be still volatile and weak through the end of January. Weekly downtrend is in motion. Even if we do get a large bounce, we're still only looking for a lower high, and then it's up to the bulls to reverse this on the weekly. Now, weekly time frame reversions here to an uptrend take a very long time. So is it a good proposition to be buying the dip on some healthcare companies? maybe not my favorite trade right now, still remains out of favor. When we check it on the monthly, guys, you will see that with the December monthly candle close, we have now lost the monthly uptrends. It is not a monthly downtrend that would be lower high into lower low, but we have now lost them. And there's two ways to recapture them. One is the engulfing V shape and reset the monthlies up there. That is the unlikely scenario. When you have such a big decline, usually a V shape, especially in a sector like healthcare, which moves kind of slow, is the unlikely scenario. More likely, you're looking for the two-stage recovery process, but that can take several months to come into effect. That being said, we're coming into support 139 down about 129, prior resistance for the markets for 2 years worth of time. So if we do find a bottoming out location, it will most likely be amongst these levels. But as I said, I am patiently buying these dips, but having no quick expectation of a full V-shaped recovery in healthcare just yet. There's just too many headwinds for the sector as of right now. Moving into semiconductors continue to remain trapped between two levels. No clear trend. It's just a massive, massive wide range. That being said, overhead resistance stays planted at 260 down to about 250, and below support stays put at about 232 down to about 220. That being said, my favorite way to play a range in which we do not have any clearly defined price action, is to be writing short puts under the market, using the wheel strategy to write short puts under the market, not necessarily on SMH itself, but on some of the individual components, some of the stronger components such as NVIDIA, TSM, AVGO. Those are my go-to plays right now. But as of right now, you can see the sector remains mixed, no clear trend. To get the uptrend in this one, guys, you need to close a weekly candle above 260 to really get the weekly uptrend in motion, fracture the highs, retest the highs, and run. That will be synonymous with this monthly very tight bull flag breaking to the upside. So still very large monthly consolidation. It's been sideways action for 5-6 months, but the sector has some very good growth prospects in 2025 and still does remain one of my favorite sectors to play for that 2025 expansion. There's some tremendous deals right now in semiconductors, and you will see me play a lot of them on the channel in 2025. And now moving into the IWM Russell. So the Russell remains somewhat weak. Why? Well, because the Russell is pretty much the S&P of small caps, right? I'll remind you of the sector weightings for the Russells. Financial services, 17, industrial, 16, healthcare, 16, and technology is weight number 4 at 14.7. So obviously, guys, when you have a 1-month heat map that looks like this, and most of the major Russell components have been down, well, obviously the Russell is not going to go up just because of the technology component. So that being said, the Russell still remains weak. They are trying desperately to reset into a daily uptrend. That would be a break of 226 to the upside, but keep in mind, we also have weekly big resistance level right here, 232 down to about 226. That is your resistance from the all-time highs back in 2021 and 2022. So it's going to be a challenge for the bulls to get through this. Keep in mind as well, guys, that we have lost the weekly uptrends, not a weekly downtrend just yet. That would be lower high into lower low, but it's not looking the best. We are once again trapped between two levels, trapped between overhead resistance and below support, 217 down to 207. If we do come down here, guys, in a rapid fashion, culminating in daily oversold conditions, I may be looking to make a second attempt at this play, but no rush for me just yet. The Russell is not performing that well since the Jerome Powell incident, because what essentially the Federal Reserve said is that we're maintaining rates higher for longer. As viewed by this summary of economic projections, you can see the interest rates will be higher for longer, right? 2 cuts instead of 4 projected. And also they revised the inflation standards up, or inflation projections up, from 2.2 to 2.5. So inflation and high interest rates are two things that the Russell does not like, which is why we've kind of unwound this post-election move from Trump. That being said, on the monthly timeframes, also showing a massive supply zone, right? So not the best look for the Russell. We could be in for a little bit more consolidation. Monthly uptrends have not been lost, but I really would not be surprised if we start retesting this lower end of support with some further momentum follow through, because we know that the bears have pretty much closed this one with a lot of momentum to the downside. Would not be surprised if the month of January proves to be fairly weak for the Russell, but as I said, I would be looking to position a little bit more if we can retest the lower end of that 210 range. Now, lastly, moving into the Dow Jones. The Dow Jones, one of the sectors most affected by the December declines because of that weak market breadth, right? You can see it here. A lot of the components of the Dow Jones are pretty much some of the more defensive names, and they just have not been doing too well, whether it's financials, healthcare, industrials, or others. They just have not been doing too well. The big tech component of the Dow Jones has been doing fine, but not enough. As you can see, daily downtrend, highly likely to continue with a flush of 42,270. If that happens into the new year, daily downtrend continues to be in motion, and we have one last little level down here at about 41,800. The bigger level comes into play at about 41,200, 40,900-ish, and that would be another roughly 3% decline to the Dow Jones. It can definitely do it, guys, in the context of a daily downtrend. We're looking for weekly consolidation, and you guys can see it best, right? We have lost the weekly uptrend, and if we go for this weekly downtrend move, where are we going, guys? Probably 41,300 down to about 40,000, right? That would not be surprising. Confluence with the 50 EMA down there, that most likely will result in daily oversold conditions, usually a good buying proposition for the Dow Jones. And you can see the monthly candle closes, guys, really not the best, right? Almost an engulfing candle, which leads us to believe if they are going for monthly consolidation, it's very possible that this lasts through the month of January, possibly wicking down here into that 41K region that I've marked off, which would be a touch of the 12 EMA. Same thing we got in August with the Black Monday sell-off of the Japanese carry trade. I would not be surprised if we retest this, and just a quick reminder, just would be a monthly higher low for possible expansion through 2025. Not looking the worst across most of our major sectors, and that is your monthly recap for all of those. Now, moving in, guys, in terms of our crypto names, well, let's take a look at Bitcoin. Bitcoin starting off the new year today on the Wednesday session, fairly good, right? However, let's recap the Tuesday session, was fairly muted. We know the context of Bitcoin right now is just this massive daily downtrend, and once again, this is another trade that is trapped between two levels. Overhead resistance, 98,000 up to about 1013. That is going to be severe resistance that the bulls have had a problem with in the most recent 1 month of trading. That being said, we are above support as well, 91 between and 87. So the market's really trapped between two levels. With this daily downtrend in motion, the bulls need to do one simple thing. They need to reset the higher high and higher low pattern. As of right now, not really looking like they're putting much motion into it. We'll see if they can get that done in the new year. However, on the weekly is very clear, right? Weekly is in weekly consolidation mode. After a crazy rally the month of November and early December, we're just trying to find a weekly local bottom, which is why I do like the support range, 91 down to about 88. 12 EMA is right there. We will see if the bulls can hit the brakes and really start reversing this into a new continuation of the weekly uptrend into early 2025. Keep in mind though, guys, the month of December candle close, not the best. This is the doji or hammer candle closing at the lows after pushing up. So this candle close alone does lead us to believe, as well as weekly, guys, we may be in for more weekly consolidation, and we may be in for more monthly consolidation. It's been a very nice 3-4 months of rally. However, keep in mind, all good things need to pull back eventually. Can we see a weak month of January and early February? Absolutely, but I am fairly bullish for the first half of 2025. So can we see a red January and possibly red early February as we move through a fairly volatile month with a lot of catalysts? Yes, absolutely, but I do think it's a buy the dip opportunity because I do still believe that we are not at the top of the cycle for crypto just yet and could see some expansion. So that is your monthly recap on Bitcoin. I will be buying the dip down here, mid 80s. But slowly, guys, pacing myself, all things considered. Moving into other altcoins such as Ethereum. Well, Ethereum also very, very weak, right? Daily downtrend is now turning into somewhat of a tightening range at the lower end of the move, though. So that's never a good sign. The bears have a very easy chance to flush this zone and come back to about 3,200 down to about 3,000. Not looking the worst, but also not looking the best. Heavy weekly consolidation, but we know that's fine. Anything at this point above 2,300, just looking for a weekly higher low for possible further trend continuation. But we also have a situation in which we can simply set a shallow weekly higher low or lower high, excuse me, and then move a little bit further for a weekly downtrend. That would just be, once again, a large form monthly consolidation. Got rejected here in December at roughly 3,900 to about 4K, which is the previous resistance range from the 52-week highs, but a challenging area for the bulls. So can we see a little bit more consolidation through January? Yes, absolutely. But if we do come down 3,200 down to roughly, 32 down to about 29, this little pocket here above the larger support zone, right in line with that 12 EMA, this would make me a buyer of Ethereum because I do believe we are due for possibly some more continuation into 2025. And that is the same for all of the altcoins. I'll remind you, we like to look at Bitcoin dominance for the altcoin rally. And as you can see, it's been a 2-year uptrend on the monthly, but on the weekly, this is pretty much still a lower high looking for the lower low setup. So it's breaking 2 years worth of an uptrend. Bitcoin moves down, Bitcoin dominance moves down. I'll remind you, what is this? This is the percentage of Bitcoin that Bitcoin's market cap represents represents across all of crypto. It's the same thing when you say, okay, Apple has a 3-point-something trillion dollar market cap versus the entire market cap of the SPY. How much does Apple represent? This is how much Bitcoin represents across all the crypto landscape. So when you have the formation of a possible weekly lower high into looking for weekly lower lows, this is when the altcoin trades may come alive. Anything from Ethereum down to Solana, down to everything in this list will benefit from this Bitcoin dominance chart coming down. This does once again not mean that Bitcoin has to come down. It just means that Bitcoin either stays flat, goes up slowly, or comes down, but this entire list of altcoins goes up a lot faster. Now, we've had a significant pullback on a lot of altcoins. If you see, I mean, Ethereum has pulled back in a massive way. Go through some of the big ones, right? You know, Avalanche has come back in a very large way. DOT has come down in a very large way. So you'll see, guys, if you go through this entire list, Phantom has come down in a very large way since the November rally. Everything is pulled back significantly. So this is an area where I am buying the dip on some of my favorite altcoins, but I'm pacing myself slowly. And it all has to do with this Bitcoin dominance chart setting up for a lower high. I am going for the follow through, which would mean that altcoins can see some outperformance in the first half of 2025. So that is how I'm playing any Bitcoin or altcoin trades as a whole. Now, moving into our big tech names, shall we? So moving into Apple, Apple not looking too bad, down about 0.71 on the Tuesday session, but all things have to come to an end, right? So Apple was in the context of this very nice daily uptrend, and now we've given back a lot of this move, and we have given back the 12 EMA. That being said, if Apple does choose to set the lower high into lower low rollover, which is a very likely scenario if the markets are still weak early January, just know what we're expecting, right? It's been a very nice 7-8 weeks of rally. We might just be looking for some weekly consolidation. Anything above 220.41 is looking for a weekly higher low for further trend continuation. So I'm not buying the Apple dips right now, even though we have dipped a little bit. Why? Because the risk reward isn't the best, guys. You have all of this of risk until we can come down into support. And what is the reward? Just the all-time highs? Not good enough for me, guys. We're coming off of daily overbought conditions, and Apple as a whole remains a trade that is admittedly expensive. If I can find the valuation here, it is currently trading right now at about a 3.5 peg at around the 250 range, a little bit too rich for me. So if I'm holding every single long-term share that I have, but in terms of swing trades, I want to see some better risk reward, and I do think that comes alive down here roughly between 240 and 230. I'll be looking for the breakout, retest, and run on this trade. Moving into AMD as well. Oh, sorry, Apple on the monthly. Apple on the monthly as well. I mean, not looking the best. Or sorry, not looking the worst, but also can indicate that we might just be topping out here. Can we see some possible follow through in January? Yes, but eventually we will have to set those monthly higher lows. And what better location to do it in than prior resistance could be newfound support in January for a little bit of a wick down, and then maybe rally into 2025. Moving into AMD right now, the chart that just never seems to go up, unfortunately. So AMD, in the context of this daily downturn again, lower high has been set. The previous one was right here. Lower high, and now the bulls are desperately looking to protect this for a daily higher low to reset into a daily uptrend. I'll remind you, the bulls had a very nice bounce right here, a bounce of roughly 70%, but now you can see the bears have rolled almost all of that over. So the bulls are running out of space, guys. If you flush these lows 117.90, you are just going to perpetuate this daily downtrend into the perpetual weekly downtrend as well. Keep in mind, this is just one big weekly downtrend, the culmination of which is most likely down here. The 200 weekly EMA is down here at 115. And then below that, we have a very large area of support, 115 down to about 105, which is the confluence with all of these guys from 2023. Now, usually in the context of AMD as a whole, you can see the 200 weekly, guys, is a very big level. Usually, I mean, this is 2022, the ultimate bear market, but usually when the overall market is in a bull market, such as we are right now, buying in or around the 200 weekly is a fairly good proposition, especially when the company has improving fundamentals. They are growing revenue and EPS very healthy clips per year. The valuation is relatively cheap, and I'll remind you of the thesis for AMD. The thesis is for the ramp of the data center business, which really starts taking flight 25 through 2027, and the revenue as well. So the company is improving its fundamentals, although they are facing more competition from companies such as Marvell and AVGO. I do think that here in the lower 115s does represent a decent risk to reward profile if ever you want to take that bet on AMD as well. So I as well will be buying more AMD if we can find our way into the mid-1 teens. We will see if the bulls can reset this. This would be step number one. But if we fall a little bit lower, I wouldn't be opposed to buying a little bit more. Moving into Amazon right now. So Amazon also down on the Friday session, down about 0.86, and Amazon coming in and setting the daily downtrend. So we know that Amazon has been relatively weak, such as the rest of the market since Jerome Powell, and daily downtrends now were to be expected. Further support zones are down here, 215 down to 208. But if you look on the weekly, this all makes sense. We are in the context of a nice weekly uptrend, looking for weekly higher lows for possible further trend continuation. So if Amazon, comes down here, 215 down to 208, it will open up some very nice put writing opportunities, but also if we're looking to load up on some shares for Amazon's ramp up of free cash flow and EPS and net profit margins in 25 could be a very decent opportunity to buy to do so. At 220, the valuation is a 1.65 peg. Not the best valuation, but also a relatively cheap valuation for Amazon and all the growth that they stand to have in the next few years. Moving on to Google right now. So Google down about 1.17, but not quite setting the daily downtrend such as other stocks in the mix. That being said, they have lost the daily uptrend, that is clear as day, but still not losing this little area of support that we have, which is your prior all-time highs, of course, not the strongest area of support. And if we do continue being weak in the markets and flush the bottom end of this 186 and go into more daily downtrend, I'll remind you the context is a very beautiful weekly uptrend, very nice weekly uptrend by the bulls, looking for some weekly higher lows, anything above 165 for those weekly higher lows. If Google comes down here, mid 180s, I will be loading up, possibly with some more call options, and some short put opportunities for the market, confluence with the 12 EMA and previous resistance, which should now be current support for the markets. The valuation of Google, even in the 190s, is very, very cheap. And if it comes down to the 180s, it will be even cheaper, which is why I love this company. Cheapest company of all the Mag 7 names, and they're growing all segments of their business very well. Still one of my preferred trades for into 2025 and not looking too bad at all. On the monthly candle close is fairly gorgeous as well. So if we do pull back in the early month of January, could just be that little bit of a pullback here, set some monthly higher lows, and then go for it February, March, and April. Not looking too bad. I forgot the monthly candle closes for Amazon could point to some further follow through to the downside and then rally. And of course, AMD was just one massive monthly downtrend, looking for further follow through. So apologies for that. I'll do a better job here with the next few names of just putting together those monthly candles. So moving into Meta right now. Meta also on the brink of losing more and more ground here, losing the last line of defense, which is this previous resistance area, which is now currently support, running out of support though, 600 down to roughly 580, this 20-point range. Now Meta has always been in the context of this daily downtrend since the mid-December point, which is no secret. The rest of the markets have been doing largely the same. That being said, we do have a lot of space on the weekly, anything above 548, looking for a weekly higher low for further trend continuation. And if Meta chooses to pull back a little bit more into this range, guys, you can see the 26 EMA has acted as a very decent buy level for the bulls every single time we've clipped into it, at least since Meta has put together the phenomenal rally since early 2023. Every single touch of this 26 weekly has been a decent buying opportunity. And this one would be a little bit of confluence, guys. If we pull down hard here, well, number one, we will most likely be in daily oversold conditions. And number two, well, this is a very much larger area of confluence. Weekly has been a large resistance range for the stock a lot of times this year. If you come down all the way there, 540 down to 530, I will be buying on the monthly time frame as well. Not looking the best for Meta. This is once again a doji candle close, so we could be coming to the end of the monthly rally. If you see a red month in January coming down 540, 530, we'll be looking to establish some monthly higher lows for possible further trend continuation, which is why I love this range, 540 down to 530. Now moving into Microsoft stock. So Microsoft down about 0.78% today. Daily downtrend simply continues. Microsoft as well, clipping into the bottom end of the support range, almost losing it. So that being said, that a very nice breakout of this range, we were looking for the retest as support and run, but the market as a whole has not been cooperating. I would not say it's Microsoft's fault. Microsoft has done nothing but improve its fundamentals all throughout the year so far, as we can see on this forecast tab right here. Nothing but improving and beating estimates on quarterly EPS. Same thing for quarterly revenue as well. And you can see the next few years for Microsoft are going to be just as good, if not better, as the last 4 years. So I'm still very bullish on this company. Company just not performing the best over the course of entire 2024, right? They are a very rare period in time where they've underperformed the SPY by a factor of 2 to 1. The SPY is up almost 24% year to date, and Microsoft only closed up 12.74. Very peculiar year for Microsoft being trapped. But what I love to do is identify companies that are trapped in long-standing ranges of accumulation while improving their fundamentals. That means that the company is, on a relative basis, getting cheaper and cheaper as it maintains the same price, but improves revenue and EPS and free cash flow. It is, although consolidating sideways, getting relatively cheaper as it does improve those fundamentals. So even though we are in a daily downtrend right now, the daily 200 EMA comes down here at about 418. This is a somewhat of a support range, and obviously the biggest one, guys, is down here. If the markets truly have a bad time in January and Microsoft once again gets flushed down here, I love this range, guys. 410 at about 390, the lower end of the support. I will be buying a lot more Microsoft, possibly going in heavier with some call options and writing some short puts. I know it's an expensive stock to play, but the fundamentals are good. Still one of my favorite stocks in the entire market. The monthly candle close, though, not looking very bullish at all. If anything, it does point to a little bit more sideways accumulation. And if we do come back, as I said, 410 at 390, this is going to be one of my favorite trades in the entire market for 2025. Moving into Netflix right now. So Netflix down again 1% in the Tuesday session. That being said, daily downtrend right now on Netflix is highly likely. We're about to lose the 26 EMA. 26 has not been lost since prior to earnings. So that being said, bearish momentum is pretty heavy to the downside. And if we do keep consolidating, I'll just remind you what the context is. Very nice weekly uptrend as a whole. And if we are looking for a higher low, it's pretty much anything above 745. Looking for a weekly higher low for further trend continuation, I would take a look at this area of confluence right here, which is the 12 EMA. The bulls have held this really, really nicely on the weekly, arguably since the month of August. We will see how we react once we're there. I'm not buying any Netflix up here, guys. I think it's a little bit too extended for me, but if we do have more severe pullbacks and we can find some possible daily oversold condition with those pullbacks, then I might be bidding a little bit of Netflix. I would really like it down here in the lower $800 range. Not too sure if we're going to get it. That's an extra 10%, but if we do get it, I will be a buyer. Now, moving on to NVIDIA, give me one brief moment. Moving into NVIDIA down about 2.33%. Not the worst day for NVIDIA, but definitely pulling back with the rest of the market, right? The context was trying to go for the daily uptrend expansion, but we can see here that NVIDIA has largely been sideways for roughly the last 3-4 months of trading. So that being said, in the event we continue rolling this over, support stays below here at about 130 down to about 125. The bulls have made an attempt at the daily trend change and tried to cover up above these moving averages, but it's just not working out. That being said, the context on the higher time frames, such as the weekly, has always been a weekly downtrend since the early stages of the month of November. That being said, if we do continue this weekly downtrend, support stays the same on the weekly as we just saw on the daily, and we have the 26 EMA right there. I will remind you, the 26 EMA has been a very good area of defense for the NVIDIA bulls ever since they started on their meteoric rally since the early stages of 2023. So this is going to be area number 1. However, if the markets have a very bad month of January and we flush this, such as we have sometimes in the past, the second area remains down here, 119 down to 115. So I am a buyer at 130 to 125, but I'm a much heavier buyer if we come down here 120 to 115, which will be confluence with the 50 EMA on the weekly as well. So all in all, NVIDIA not looking too bad. I will be buying dip number 1 here and dip buying number 2 a lot heavier if we come down here. The 200 daily EMA is also sitting down there too. On the monthly time frame, I'll remind you who is in control here. It is definitely your monthly bulls. We would just be looking to set some monthly higher lows for further trend continuation. NVIDIA should be having a beautiful 2025 in terms of fundamental expansion. So you can see they're trying to play defense right here, but if you come down here, this is truly going to be the glorious area for a monthly higher low for further trend continuation. So this first one, 130 to 125, second one, 120 down to 115. Moving on to Tesla right now. Tesla, daily downtrend is in motion. So coming back off the highs in a pretty rapid fashion, entering our support range, 410 down to about 377. Nothing has changed, but keep in mind tomorrow we do get Tesla deliveries, which will have a short-term impact on the price, of course. That being said, when we know we have a daily downtrend, we have to look at the weekly time frame, and it is in the context of a weekly pullback. So that being said, who's in control right now? It is your weekly bulls. Beautiful weekly uptrend. The weekly higher lows are right here, 330. So we're just looking for a weekly higher low for further trend continuation. We will see if the bulls can play some defense in this support range, 410 down to 385, or if we just flush through and come tag the 12 EMA and come tag the 365 area, which was previous resistance for a while and now should be acting as support. The 50 EMA is also there on the daily, so a lot of confluence down there at the 365. We'll see how deliveries play out on this stock, but coming out of weekly overbought conditions, doing a good job of cooling down those higher time frames. Once again, the bulls are in full control, looking for the higher lows for further trend continuation. In terms of the monthly guys, monthly candle close, now looking the best for Tesla. We could not close a monthly candle above the range of resistance of the previous all-time highs, but all in all, not that bad. So if we do see a red start to the month of January for Tesla as well, what are we looking for here? Well, the context is definitely a monthly uptrend, that is for sure. Anything, guys, above 213 is looking for a monthly higher low for further trend continuation. So we will see how low the monthly time frame can go. I mean, everything is down, right? The daily is a downtrend. Weekly, we're in consolidation mode, and that could lead us also into some monthly consolidation. But just understand, the bulls control all the longer term time frames here. So we might be a little bit patient with our dip buying on Tesla, but the longer term time frames do look quite attractive. Now, before last, we have Palantir. Palantir down about 2% on the day. Not the worst day for Palantir. Daily uptrend is still in motion, looking for the daily higher lows. Anything above 70.5, looking for the daily higher lows for further trend continuation. We will see one last area of defense down here. 72 down about $70. 26 EMA is there as well. We have not lost the 26 EMA, guys, much since the month of September. If we do lose it, it has to be notable to you. We will be losing a few things. If we lose the 26, we'll arguably be on the verge of losing support. We'll be losing the daily higher lows as well. And you open the doors for something like this, lower high into possible lower low for the Palantir bulls. And that would just be a beautiful opportunity for some weekly consolidation. Still looking for a weekly higher low, anything above 40.5, looking for that weekly higher low for further trend continuation. So if things get bad in the month of January and Palantir gets dragged down in the mess as well, we could be looking to tag maybe the 12 EMA right here, which Palantir has done several times in the past when it's been looking to set the weekly higher lows. You can see how much they come back and pull into the 12 before maybe setting a higher low and going for that one more leg upside to the upside. So this would be the likely area that I would be looking to go shopping with some short puts under the market if we pull down into there hard. Still need to cool down the weekly RSI a little bit, and this would be the perfect opportunity to do it in the month of January. That being said, the monthly candle close as well. Bit of a mixed bag, right? Doji candle on the top, but still looking good. The body of the candle is still healthy, but after 6, 7, 8 months of rally in a row, sometimes you do need to have a little bit of monthly consolidation. Look to set up the monthly higher lows. So if January and early February is the case for that on Palantir, I'm pretty sure it's not because their fundamentals will erode or get worse or anything. It may just be because the markets may have some monthly consolidation in them. Maybe you lose a little bit of momentum, a little bit of hype on Palantir. All the weak hands get shaken out of the trade, and then we find ourselves in the mid to low 60s range before we find a local bottom on the monthly and move higher. So that is how I'm viewing the markets for Palantir. But as of right now, guys, the bulls have not lost anything. I'm just giving you guys future time horizon trades in the event we start to actually lose these levels. But as of right now, the bulls are still looking strong. And lastly, on SOFI still remains a little bit of a mixed bag here, guys. We've been pretty much sideways since the later stages of the month of November. Still, no clear trend in motion, right? The bulls are trying for a new daily trend change that will be a higher high above 1661. But in the event we flush it to the downside, you open the door as well for a daily downtrend. That being the case, we are trying to use these levels on the weekly as support. The bottoms of these guys down here from 2021, talking about roughly 14 up to about 15, that is what we've kind of pulled up into. And we're trying to use the bottom of those as support. We do have confluence with the 12 EMA on the weekly as well. So we will see how well can the bulls uphold this region. But as of right now, it's just been largely sideways weekly time frame consolidation, which is not the worst case. You are cooling off the time frames here on the weekly on the weekly RSIs. So not the worst. If we do pull back here, guys, I'm willing to play SOFI, and I have been playing it around the $15 range for some short puts, but I am looking to DCA and build into this position. Some at 15, some at 14, and some even at 13 if we come down there. That would be a very good location for SOFI. The valuation is still relatively good, but we know we've had a lot of momentum to the upside, and over the past 6 weeks, we've kind of just been oscillating here. So if we do continue, it wouldn't be the worst case scenario. The monthly candle close also is not looking too bad. Who is in control? Definitely the monthly bulls, guys. If we get any form of pullback, we will just be looking for a monthly higher low for possible further trend continuation, which is why I'll be looking to buy the dips 15, 14, 13, if we get there. I'm not saying we will get there, which is why I'm playing it at 15. But if we come a little bit lower, I want to keep some buying power for those monthly higher lows to possibly have a very good year of fundamental expansion for SOFI into 2025. And that is pretty much everything in terms of our daily, weekly, and monthly recaps for, well, the weeklies aren't done yet, but just recapping the dailies and the monthly candle closes, of course, and how we could be shaping up into the month of January. A little bit of volatility would not be strange to the markets. The monthly candle closes do definitely point that we could get further downside follow through. And also the indicators we were looking at too does point that we could get some further follow through. A couple of the reads are at extreme fear. We are at fear, but it can get lower, guys. A couple of our momentum indicators, percentage of stocks above the 20 EMA are low, but can go lower. 50 EMA as well are low, but can go lower. And the 200 as well. Some low reads, but can also go lower. But now is the time to identify your favorite stocks, the levels at which you want to buy the stocks for these weekly and monthly consolidation phases. And this is probably going to be one of the last opportunities through the month of January to buy the dip on our favorite companies if you have a bullish view on the market for the rest of 2025. If you ask me what my view of the market is, I'm fairly confident in this market, at least through the midpoint of 2025. I think the early stage of 2025 can be bumpy, a lot of macro catalysts in the way, especially end of January with Powell, with Trump, with earnings and stuff like that. But mid to late February and then March, April, May, June especially too, I do still think we have a very good chance of making a lot of money to the upside. Any recession indicators or any macro degradation of the economy should only be felt in the second half of 2025. So my goal is in the first half of 2025, try to make as much money as possible on my favorite companies and then kind of take the foot off the gas in the midpoint of the year and see exactly where we land. That is just my perspective on the market. I remain cautiously optimistic. I obviously understand that there's a lot of negative catalysts that could come to undo some of the market bullishness, and we've been over them a lot in the last 2 weeks, so we cannot forget the bear thesis. As such, I remain cautiously optimistic on the market. I remain cautiously bullishly positioned in my portfolio, but everything considered, guys, I do still think the economy has some very good numbers in front of us. We still have a very good chance of getting some booming growth in the first half of the year, with any downside possibly only in the second half of the year. So that is everything I had for you guys in today's video. Hopefully you enjoyed it, and hopefully you enjoyed the more brief rundown of the markets. If you did, consider dropping a like on the video. Would appreciate it for the growth of the channel. Also consider subscribing to the channel if you're new. We do these videos every Monday through Friday after the close. However, I will be taking the next 2 days off, guys, with pretty much spending time with family for the New Year's break. And then we're going to be locked in, guys, from January, all January, February, etc. I do these videos pretty much every single day. Haven't really taken any days off whatsoever. However, Thursday and Friday, probably no videos from me. You will see me back with the top 5 options plays on the Sunday session. And then we resume for the month of January. We are locked in. So that being said, make the most of it. Spend some time with your friends, your family, your loved ones over the next few days, because January, we got to lock in, guys, and find some of these great deals on these great companies. If the markets continue falling off, we have to buy that fear on our favorite companies with improving fundamentals, of course, right? And lastly, if you have any questions whatsoever, always feel free to leave them down below in the comments section. Anything you guys want, you know, is fair game. I usually answer you within the first 24 hours. And lastly, if you do want to join the private Discord and have access to all of my trades, the trades that I place in real time, all of the short put trades, so the wheel trades, the call option trades, everything like that, you can see I always go through the full Discord history. These are all the trades since the inception of the Discord. All the green check marks are win. I can't guarantee that future performance is going to be indicative of past performance, of course. Nobody can, but we usually run a very consistent and profitable strategy. So if you want to have access to all of these trades in real time, the link to the Discord is down below in the description, of course. We do obviously the daily trades. We do private morning live streams every morning between for about an hour or two. We do private videos on strategies that I do not show on YouTube, psychology, how to grow a small account, etc. And you can chat with me all throughout the day and ask me your opinions, or my opinions rather, on your stocks, your options, and I can answer you in real time with screenshots of charts and a lot more in depth than I can ever do on YouTube, right? So thanks very much for watching, guys. If you want to join the Discord, the link is down below. Hopefully I see you in there soon. And if not, well, I guess I'll see you back on the channel. Take care. Pleasure as always, guys. I will see you on the Sunday, because no videos on Thursday or Friday. So I'll see you on the Sunday session for our top 5 options. And then through the new year, Monday through Friday, again, we will be here every single day, grinding and locked in together. So take care, guys. Peace, pleasure as always. Happy New Year again. Love you guys. And thank you so much for making 2024 one of the best years for me on the channel. A lot of subscriber growth, a lot of engagement. The private Discord is doing well. So thank you so much, guys, for allowing me to grow alongside you. And hopefully you guys have learned a lot through this channel so far, and much more to come in 2025. So take care. That's it for me. Peace.